Open Trades! I want to do a video analysis update on some popular stocks, but also some stocks that are pretty under the radar. We're going to go over PayPal, Shopify, Arcos Dorados, that's a McDonald's constituent, Cheesecake Factory, D-Wave Quantum, Dow the stock, not Dow the industrial average, Remy Cointreau, which Dow Industrial Average and other index bears are going to need to be drinking, Huya, and Palantir. I almost said PayPal again. It is Palantir, though. Oh, man, I should know how to say that one, right? That's the next Microsoft. Can you believe it? They made the next Microsoft difficult. Who could have predicted that? Who could have predicted they made the next Microsoft so difficult? I don't think anyone had that on their bingo card. But I did have aliens on my 2024 bingo card, funny enough. Anyway, wave 1, ABC, wave 2. The only reason I bring that up is because what do you think they're going to do to the next Google? Do you think they're going to make the next Google easy? We saw what they did to Palantir, but there's one stock out there that everyone said was kind of like Palantir, but instead of being the next Microsoft, it was the next Google. You might know what stock I'm talking about. And if you don't, you might want to lock down your thinking and really kind of focus on what stock I'm probably referring to. Anyway, it doesn't have a yield max ETF, so it's not going to get as much time as PayPal Wave 1, ABC Wave 2. And by the way, this yield max ETF from PayPal looking good. Again, I know I'm crazy for this, but where's this yield max ETF drop again? Where did this drop? Right around here? This is where the yield max ETF drops. Right here. I'm just saying. Wave 1, ABC Wave 2, 1, 2. Look at this RSI. Wave 3, 4, and 5 ends with momentum divergence. Perfect subdivision. I definitely pointed that out. And now we have an ABC correction at the 78.6% fib. So this is very pretty. Why is this very pretty? Why is this very pretty? Is it because of the price action? Well, the price action is nice, but it's really all about this relative strength index. And this is how you're going to know right off the bat if you shouldn't even be looking at an Elliott wave theorist work. If they don't have the RSI, they're not doing Elliott wave theory. I can promise you that. If they don't have the RSI on the chart, they're not doing Elliott wave theory. They might as well be drawing triangles. They should honestly be doing some of the other analysis that I talk about. Anyway, wave 1, wave 2, another wave 1, another wave 2. Look at this RSI. Beginning of the cycle, we see the highest reading on the relative strength index is made within wave 3 of wave 3. That is called Elliott wave confirmation, that this is a wave 3 of wave 3. Pup, what in the world does that mean? You know, are you about to sell me a Discord? No. I'm not about to sell you a Discord by talking about Elliott wave confirmation. Let's dive right now into what this means. So when I say that we have Elliott wave confirmation, what do I mean by that? Well, Elliott waves are all about finding 5 waves sequences and then 3 wave pullbacks. That does not mean that 5 waves impulses can't be to the downside. So looking at the what would a ridiculously bad count of PayPal be before this? It would be that this is wave 1 and wave 2. This is wave 3 and wave 4. So bears are going to say this is wave 5. And it's time for crash, right? So what I'm saying here is, besides the fact that we go way past the 78.6% fib, which would usually, almost always invalidate that this is a wave 4 correction, so it must be a wave 2 correction. The fact that we make a new high on the RSI within the beginning of the cycle, there's a rule in Elliott wave theory that says wave 5 ends with momentum divergence. That's why I pointed out here, 1, 2, 3, 4, 5 ends with momentum divergence. We break to a new high on the RSI. That suggests this is not a wave 5. It is, yes, wave 3 of wave 3. That's just all I was trying to say with that. So let's zoom out a little bit and get some, get a little fancy. What I really like about PayPal is that it's got a glorious ETF right now. It's got PYPY blindly averaging into it is a 49% annual return. The yield on this ETF is astronomical, very easy to look up but it's quite high. Why is the yield on this ETF so high? Especially if PayPal starts running into a bull market, we start seeing bloated call premiums be sent. We see 28% implied volatility, the lowest implied volatility we've seen all year for the past 52 weeks is 24%. So that's the lowest implied volatility that PayPal is expected to have. I would gander that's going to mean that PYPY's yield is going to be at least 25%. And then the higher the implied volatility gets, especially if we get a call skew because we're in a bull market, that yield's going to go even higher. But again, it's not about the yield. It's also about the total return. So people think dividends are scams. These yield max ETFs are scams. The word scam can be defined very, very easily. And the easiest way to do that is to go to ETF Total Return Calculator and just figure out what happens when the ETF is blindly averaged into. I don't call 49% annualized returns scams typically. But let's look at this. So ways to get this wave 3 target, I believe, yes, we're in the middle of things. Normally, I don't like buying breakouts, but what's different? Yes, we have this yield max ETF now. This is why every classical trader should be talking about these covered call ETFs, these out-of-the-money synthetic covered call ETFs constantly, because they're always talking about buying new highs when the premiums are high. It's used to with Elliott Wave, when it was only possible to buy commons, the only chance was to buy PayPal here. Now, I can wait for the breakout. I can pair PayPal with PYPY and get that yield from the out-of-the-money synthetic covered call ETFs during a wave 4 correction. So I don't have to worry about this being dead money anymore. Oh no, dead money, dead money. Nope, out-of-the-money synthetic covered calls. That's big money, actually. So I've already owned PYPY. Honestly, based on the analysis that I've done live in this video, I mean, even just setting this video up, I'm probably going to buy more PYPY. It wasn't on my radar before I started making this. So that's one reason I do this. It's all for my own portfolio. So we're going to have to get out a little bit into this 3-year weekly time frame. I've got the chart marked up on the daily, so it's going to look a little ugly here, but I just want to show what I'm expecting, and let's just kind of illustrate the power of these new out-of-the-money synthetic covered call ETFs. Count how many times we're going to look at wave 4 corrections being forecasted in this rally, and instead of gaming them, I'm just going to hold and keep reinvesting and dripping a combination of PYPY and ideally PayPal itself, because this upside appreciation, as we'll get into on other charts, could be a big deal. So I'm looking for something like this. But again, these where it kind of looks like a horse's mouth or a dash hound's mouth. These consolidation periods usually for growth stocks, they're dead money. They're not fun to hold through. But now in this new age of collecting out-of-the-money synthetic covered call premium, and even YieldMax having numerous competitors that do this, it's not dead money. It's actually what I look forward to the most, to be honest. We see up in this big thrust, the call premiums are going to be inflated. Consolidate, thrust, premiums. Drip the premiums. Thrust. It's a lot of fun. All right. Used to these wave 4 corrections with blow. Now, they make me want to try blow. Anyway, 1, 2, big wave 3, shallow wave 4, and a wave 5 higher in progress. On the daily, I subdivided this for y'all. 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2, and then big wave 3 of wave 3 thrusting. That 79 target I like for the blue, the blue wave 3 target. For all 1, 2, 3, 4, 5 waves of the red sequence, which is going to end the blue wave 3. I like taking the length of wave 1 and placing it at the wave 1 high. That comes from an Elliott Wave principle that wave 5 is at least the length of wave 1 placed at the wave 4 low, and wave 4 usually retests but does not breach the wave 1 high. So that's kind of a shorthand for finding this whole 5-wave sequence up to 85. That's going to end this blue wave 3, shallow wave 4 consolidation, and then a wave 5 higher, which I've kind of drawn up for you guys. It's not going to, it might look perfectly like this, honestly, given with how I've been doing. But yeah, I'm looking for something like this, and that's going to be enough for now. With Shopify, we'll talk about this long-term picture about what this could morph into. But even then, with the yield that PYPY has, I even think, trudging up here towards 95 might make a position that's in the money already. If I had to get really fancy, I would say that's going to end a wave 1 in black. The bullies will look for a wave 2 correction again, one that I'm going to be happy to reinvest in drip premiums through. It's going to be a little more violent to the downside, but then that's just going to end the wave 2, and then a wave 3 is going to begin from there based on this forecast. So I'm excited to collect premiums from PYPY the whole time. Let's talk about Shopify, this bigger picture. No yield max ETF here, but a big leading indicator. Let's make sure earnings are out of the way. They might not be, but these are highly correlated, at least in my opinion. Let's see. Yeah, we got earnings out of the way. Cool. Was PayPal? I don't even know. Were they earnings today? I don't think they were. Were they? PayPal, they got a cryptocurrency that I can buy, and they're gonna let people buy cryptocurrency just by getting a PayPal account. I'm probably gonna do that, man. Robinhood does a similar thing, but if any of these people can convince me I can just get just link my bank account up to it, buy some crypto, have it in a wallet, PayPal or Robinhood's gonna do that for me. They're definitely gonna get an account opened up in my name. Until then, I gotta hope the Ripple and the Bitcoin maximalists aren't too correct, and that we don't see, or I guess also the AMC feeders and GameStop bulls aren't too correct. We don't see that flip switched and the financial system goes down. Anyway, this is a technical video, not a fundamental one. Shopify, I think, big leading indicator from PayPal. Big leading indicator. Is it really smart? Are any smart technical analysts and quants going to be saying their swing trade, not their day trade, their swing trade is going to be setting this 91.57 as the stop loss for their short position? They're probably not going to do that after seeing what PayPal just did to a very comparable high. I mean, we can even just look at these. If I covered up these numbers, it might be difficult to tell which one is which. Let's look at this long-term picture for Shopify. 1, 2, 3, 4, 5. Again, the highest high within the sequence is made within wave 3, a wave 4, and then a wave 5 that ends with momentum divergence. A little less clean on the monthly chart. 5 waves up, ABC 3 waves back, right at the 78.6% retracement. I pointed that out while it was at the 78.6% retracement, or a little below it. And then this is the from this low, or in the big picture, ultimately, I'm looking for a big wave 3 to begin. I believe that PayPal is leading this sector. It would make sense that PayPal and Shopify get to this high probably around the same time. I would expect that PayPal breaks the high first, just based on it being the leading indicator right now. But the market rotates in mysterious ways. As good as I am, I'm not going to forecast the rotation that specifically, like who's going to win the race to the all-time high. That's a little much. Anyway, 5 waves up, 3 waves back. That's 78.6% fib for growth. Learn to love it, because that's really the only option. Being afraid of 78.6% retracements and growth, no bueno. That's a very common wave 2. 1, 2, 3, 4, 5, wave 1, ABC wave 2, another wave 1, and ABC wave 2 correction. And now is the gambling man gonna bet? Is the gambling man gonna bet on this? Probably not. They're probably not gonna bet on this. Why? Simply, well, also 5 waves up, wave 2, 1, 2, 3. That'd be one reason. But why are they most likely because of what happened today? Definitely not going to bet that this high won't be broken. After seeing what PayPal did, these charts are nearly identical. This looks like a follow the leader setup. Pretty clean. I can't tell my broker that Shopify has a lot of evidence for it if I go in on margin and it's got a nice pullback afterwards. So that's one thing to remember. 5 waves up. Wave 1, ABC wave 2, another wave 1, ABC wave 2. Nice leading indicator in this name. I think wave 3 of wave 3 goes up. Here we can find some minimum wave 3 targets by taking the length of wave 1, placing it at the wave 2 low. That's a little minimum, 93. I think a little more accurate. I'll take these extensions. I like when the 127.2% extension lines up with the 161.8% fib. So we'll have 108 to 120 be the wave 3 target zone. Before a shallow wave 4 and a wave 5 higher. I think that's going to complete a wave 3. Before, yes, a shallow wave 4 and a wave 5 higher. Glorious template for Shopify and PayPal. I'm 100% certainly going to. I already invest in PYPY. I'm probably going to buy more PYPY, and I'm really going to be tempted to buy lots of PayPal and blend it in with that as well, because this is not this is a stock and this is a sector where dividends are great, and I'm really excited for the covered call premium to receive. But once PayPal and Shopify are gone, they're gone forever. All right, they're gone forever based on this wave count. They're never coming back, ever. Say bye-bye. So this is what I've got. I think it looks pretty good. That's specific enough for now. Yeah, that's specific enough for now. Shopify, big leader. Arcos Dorados. Arcos Dorados operates as a franchisee of McDonald's, with its operations divided in Brazil, North Latin American division, South Latin American division, and the Caribbean division. It also runs quick service restaurants in Latin America and the Caribbean. It also operates in territories in other parts of Latin America. I'm sure that's what it says. So, very interesting. McDonald's, Latin American franchisee. Go to that website. You'll learn lots of Spanish. I might try to learn Spanish by reading the prospectus. I'm sure this company has a prospectus in English and a prospectus in Spanish. So I'm gonna try to read the prospectus in English alongside the prospectus in Spanish and get my Espanol perfecto, because I'm trying to go international. I am thinking about starting a little something. I got a name for it. But anyway, yeah, this is a pretty 5-3-5 sequence. If this video gets 30 likes and 350 views, I'll show you the screen that I found this on. I haven't shown it to you guys yet, and that might be low. I can't believe that. I actually want to revive. Let's get 400 likes. No, sorry, no, 400 views. That's not. Yeah, 400 views and 30 likes on this video. I'll show you guys the screen where I found this. I can promise you it was not an option screen, and it was not a screen that I've ever shown you guys. So we'll see. I'll give you guys a little bit of an incentive there. But yeah, this is real pretty. Let's look at this RSI right now. 1, 2, big wave 3, highest high on the RSI. Look at this wave 4. Wave 4 goes down, it retests 50 on the RSI, just like I talk about. And then wave 5 ends with momentum divergence. Just get used to seeing that on the daily, on the weekly, a little bit of the monthly, but especially the daily and the weekly. 1, 2, wave 3 makes the highest high on the RSI. Wave 4 retests 50, and then wave 5 makes a momentum divergence. So that's that. Let's see. How do we get this How do we just subdivide this ABC correction? It does matter. Let's see. Yes. Oh, that's glorious. I didn't even notice that. Right there, the 127.2% extension. Coincidence theorists, you got a chance here to bet that's a coincidence. I'm not gonna bet against McDonald's puppy trades. You're learning something. Very pretty. Do you guys not want to know where I found this stock? I mean, this is definitely not one that I found on an option screen. It wasn't one of the this was a bar chart screen, by the way. I don't want you guys to think that I saw this on one of the New York Post screens. I love the New York Post screen. The New York Post screen is honestly probably my favorite. It's definitely in the top 3. But this did not come from a New York Post related screen. Although I love those screens. And you guys like those screens too. I've noticed you guys just don't comment when you guys just ignore you ignore all the extra stuff I say, and you guys are like, yeah, we got that chart. And I'm sure what happened to that realtor has nothing to do with RQI and SCHH. But again, I'm investing in real estate, so you can call me what you want. Wave 1. Wave 2. My biggest risk, honestly, is this roaring kitty fool and these Ripple and Bitcoin maximalist people are right. I mean, that's why I kind of, give it a little bit of credence. I've also done independent research, and I found, they're not quite pulling it, tea leaves and stuff like that. But yeah, it would look something like this. Look at this, even from this low. 1, 2, wave 3, wave 4, wave 5 ends with momentum divergence. I think it looks something like this. The invalidation is really clear. 8.71. Good Lord. I'm not even trying to. It's almost like I'm trying to make people, call me a furu, giving a tight that stop. Let's be a little more fair. 8.59 invalidates the 535 sequence. So that's Arcos Dorados, aka a McDonald's franchisee. So just to answer your question, no, I'm probably not going to short McDonald's based on that information. Anyway, let's look at this. Cheesecake Factory. They're buying strangles on this. This is a fun one. I think I've been to Cheesecake Factory like twice in my life. There was, you name your company Cheesecake Factory, you can't expect people are going to go there for the burgers. But they got really nice, you go to Cheesecake Factory, you're like, this place should not be called Cheesecake Factory. Anyway. All those yellow cakes. Yeah, you guys know about yellow cake, right? We heard something about yellow cake from our leader. Our leader gave us a big warning about yellow cake today. Interesting. I talked about the uranium stocks a good bit about a week or so ago. Now our leader is warning us about yellow cake. Now we'll see what happens to Cheesecake Factory during the yellow cake warning. Oh, did I lose someone? Anyway. Cheesecake, yellow cake. Get it? 26.12. Let's see. Yeah, this is clearly 1, 2, wave 3. Look at this RSI right here. Actually, it would be a little more accurate to say wave 3 ends here. Yeah, it's a little more, it's a little uglier. It's a little more accurate to say wave 3 ends there. I should have done a blackjack stock in this video if I'd known we were going to talk about yellow cake. Because I talked about URA recently. You can see my post on that. I should have done a blackjack stock, though. There was something called Operation Blackjack that was simulated by some of my best friends. Wave 1A, Wave 2, Wave B. There was also something called the Clade X simulation, and now we have something called the Clade 1 variant. Wow. Now it's just going to be Event 201 that they do that with, pup. Okay. This high 41.05. Sorry. I don't live in one of the blackjack cities, though, so I don't really care. I don't live on any of those big fault lines either. 41.28. But some of the pups do, you know. I care about the pups. Don't hurt my pups now. I refine this group very carefully. You can't even hurt their sons. I know all about DraftKings. Come on, King. We got all the young people calling themselves kings now. See how it's all synced up with the gambling stocks? DraftKings, Operation Blackjack, Yellow Cake. They like to have fun. They're fun. They're fun people. $41.25, 41.12, 41.25 is the high. Notice how this is a pretty clear subdivision. The purists are going to say that wave 4 retests the wave 1 high. So this is a diagonal, leading diagonal, 34.32, 34.33. I'm just making sure I got that high right. Yeah, so this is a leading diagonal. There's the contracting, I guess that's an expanding leading diagonal. But the hallmark of a leading diagonal is that there's clearly 5 waves, but wave 4 goes way too past the wave 1 high to be labeled a wave 4 in typical settings. But diagonals are very common. So if I suspect that a large wave 1 or a large wave 5 is being formed, that's going to be evidence of a leading or ending diagonal. In the case of a wave 5, it's a leading diagonal when it's a wave 1. Let's see. Yeah, so I'm looking for something like this. Wave 1, ABC, wave 2, and then this is wave 1, wave 2. It's going to get pretty explosive. 3, 4, 5 all day. Is there a Cheesecake Factory dividend? Ah, man. I'll be at that point soon where like I can really just go to these places and just not even care what I spend money on because I'm really just paying myself back. I mean, that's basically what I do in the insurance market. And I don't get into debt, but that's what, people I care about are in debt. So I got to make sure I'm in the insurance market and the debt market. I'm trying to get there with the real estate market. That's why I focus on real estate so much. I think that, I'm not one of those poverty, you got to go into poverty to be a good trader. It has to be rags to riches. It has to be Charlie Munger, and all that. I don't think that trauma is as beneficial as people think it is. But being poor and really understanding bills, I went through a phase where I was pretty poor and I started very much focusing on, okay, why am I investing in something that doesn't directly impact my bills? And that's why I justify investing in the insurance market so much, because of course insurance impacts my bills. And also this is really just my skill set. I studied straddles and strangles for so many years, and I never thought I would be able to do short strangles or short straddles because of all the collateral risk. But that's those days are long gone. But my knowledge of straddles and strangles and the Greeks are still here. So anyway, yeah, very pretty, very pretty. Let's look for a stop. The stop is going to come from the 78.6% fib, 28.59, 41.25. 28.58 and 41.25. Yeah, so 31.29 is going to stop. It's a nice invalidation too. That's really the stop. I think it's just the ideal stop. It's kind of wide. That's not really wide. Yeah, I like it. And then the wider invalidation, it's too wide right now, but if it did get there, it would be 28.58. They've been buying strangles on. They're buying strangles on Cheesecake Factory, so I can tell you if it does get there, I believe that they're going to have bloated puts from a delta neutral position. So their delta is now going to be deep negative, and they're going to be able to buy shares of Cheesecake Factory based on that delta equivalency. Here's what that means. Let's say they bought a strangle on Cheesecake Factory yesterday, and Cheesecake Factory was delta neutral, 50 delta to the call, negative 50 delta to the put. That's a 0 delta for the trade, delta neutral. Cheesecake Factory goes down, down, down. What happens? The call delta basically goes to the wayside, but the put delta explodes. It goes to negative 80, negative 90, and while there's still a little bit of call delta and there's a negative 90, negative 80 delta for the put, the MMs can buy 80 shares of Cheesecake Factory risk-free. If the straddle itself was in profit and the put now has a delta of negative 80, they can buy 80 shares that are considered risk-free. They're already in a profitable straddle. They're still going to have a negative 20 delta to the downside if Cheesecake Factory keeps crashing. And so they do this with dividend stocks to collect dividends in these scenarios. But anyway, that's why 28.58 was mentioned. 31.29, that's 78.6% fib, is the stop. Cheesecake Factory from the strangle screen. This one, D-Wave Quantum. We're going to have a little bit of fun here. This came, it was on a low reading on the unusual options volume screen. D-Wave Quantum. Let's look at some of these fundamentals, because the fundamentals are kind of iffy. We got an annual income of negative $82 million. Wow. I mean, people are speculating about all types of stocks going bankrupt, all the time, and they're talking about stocks like Tesla that have 15 billion in annual sales and whatever Tesla's annual income is. This is a stock where I look at it, I'm like, man, the bankruptcy bears, I gotta listen to them a little bit. We have a negative $82 million annual income. That's not good, and it's not even really getting that much sales with that negative income. So what's the idea with this stock? It's kind of special. It's kind of one of those stocks that honestly sounds like a fourth grader came up with the idea, but it's a reality now. Yeah, D-Wave Systems offer quantum computing systems, software, and services, as well as a provider of building both annealing and gate model quantum computers. So they say quantum over and over. D-Wave Systems Inc., formerly known as DPCM Capital, is based in Burnaby, British Columbia. So they're doing the classic thing. I mean, look at this abysmal. I mean, when you talk about stocks going into bankruptcy, go to the interest coverage. That's going to be the very first sign. A negative 2,067 interest coverage. That's very bad. Negative 944 profit margin. Negative 111 return on assets. This is very bad. A very unprofitable company, and they're really just trying to do this. We have this totally new age technology. So that's what I'm trying to show you. There's no bull. The fundamentally investing in this stock does not really make sense. It really only makes sense from an Elliott wave perspective, and that's not to give any investment advice in any way. That's just to give you guys my opinion on, if a stock is fundamental, like real estate, I make it very clear that there is fundamental reasoning for me investing so much in real estate that affect my personal finances, the bond market very similarly, but that's just good finance in my opinion. Am I exposed to upside risk in D-wave quantum computers? I'm probably not. But are there examples of times where this is like the case where someone can be have upside exposure to a sector? I think there are cases like this where even when there's a really quirky sector, even when there's a really quirky sector, I think the best example right now would be AI, right? So many people, software developers especially, are worried that AI is going to take their jobs. And I'm actually going to zoom into the weekly chart for this. I'm going to make these a little smaller. They're worried that AI is going to take their jobs. And so I look at people like that. They've invested a lot in their careers, and they potentially live in really expensive parts of the country, and they're worried that AI is going to take their job, and then what? What are they going to do? Are they going to go sell insurance? That would be one where an AI stock or the AI sector might legitimately be upside exposure to that person. That makes sense. Self-driving, cars. Someone is a self-driving. They're a Uber driver. They're a taxi driver. They're a truck driver. Yeah, self-driving vehicles. Even though it's a very quirky sector, that is definitely upside risk to those people. So, again, not to give investment advice anyway, just to show the way that I'm exposed to upside risk in real estate and the way people I care about are exposed to upside risk in the bond market because it's debt. Some people with this very new age technology that's coming out, like AI and self-driving cars, they are exposed. They have upside risk to these stocks, and they're worried their jobs are going to be taken. What do you do? Well, what do I do when I'm worried about real estate getting more expensive? I do a much different thing than a lot of people who are worried about real estate getting more expensive. I invest in it. Same thing with oil and gas. Honestly, I think for the people who survived 2022, that inflation cycle, and I mean literally survived, like it was hard to eat during that time for some people, depending on where they lived, that's the best thing that would have ever happened, because those people are going to always, whenever they look at their repertoire, all the different tickers to invest in, from my experience, understanding how expensive things can get and realizing what my upside risk really was in early 2022 was the best thing to ever happen to me. I started investing a lot more in commodities and real estate after that, and not really even caring if they went up, because I wanted them to go down and I wanted things to be cheaper. That way, the huge dividends that I get from an ETF like PYPY retains its cash value. And when I have a diversified portfolio where I am exposed primarily to things that are upside risk to me, upside risk in that if they get more expensive, that's bad for me. When I'm exposed primarily to that, and I've got all my bases covered, what happens is something beautiful. Cash then becomes a glorious hedge. I want things to get cheaper so I can hedge the portfolio, a diversified portfolio that tracks my upside expenses. I can hedge that with cash, and it's very beautiful. That's making the market work for you instead of vice versa. Anyway, yes, beautiful 1, 2, 3, 4, 5 wave sequence. I take these fibs right there. I can even just see, look, no, I can see where the 127.2% extension is. You guys saw that. Come on now. I'm pretty cool. Oh man, it's just so pretty. So I'm looking for wave one, wave two. This is the larger sequence in black. Big wave three in progress. I've subdivided this right here. 1, 2. Look at the RSI. Wave three. Highest high, shallow wave 4, retest the RSI almost like it has to, almost like the market's programmed and run by robots. And then a wave 5 that ends with momentum divergence. Maybe I shouldn't be making fun of D-Wave. Maybe they're onto something. Anyway, I'm looking for... I'm not making fun of D-Wave. These people are smart as heck. But if you really... There's a fun group of people that have some interesting thoughts on D-Wave quantum computing. I just think it's funny this company loses like $87 million and it looks like it's gonna go up. So that's just my opinion. The stop, that's a little wide. I think this is a pick the low situation. I'm looking for 0.75, not to be held just from a percentage standpoint. The invalidation is going to be 0.6813. And then the stop is going to be 0.7505. Man, very pretty. Very pretty. Goes on long with that IWM theme. Dow, complete opposite of the stock we just talked about. Couldn't be more different. We're talking about a stock, $589 billion in annual income, Let me try that again. $589 million in annual income, $44 billion in annual sales. Holy cow, look at this. This company has more in annual sales than its market capitalization. Isn't that crazy? That's what this price to sales ratio means, by the way. That is 0.85% of its annual sales. What? Man, I'd give this company a loan. Are you kidding me? Price to book, 2.01. So we got a 5.22% dividend yield. One way I would add to this analysis is by going to the stock total return calculator and doing the blind average test on that. I'm not going to do that in this video. That might come, but just look at these fundamentals. What does this company do? Dow Inc. is a material science company. This is not the Dow Jones Industrial Average. One of my friends one time tried to buy the Dow Jones, no joke, at the COVID-19 low, and he bought this stock. He bought Dow. He was so mad. Luckily, it tracked the market, but it was so funny. He was like, bro, you bought Dow. Like the company. You didn't buy the Dow Jones. I can't believe they do that, though. That shouldn't be legal. Dow is a materials science company providing a world-class portfolio of advanced, sustainable, and leading-edge products. Dow DuPont offers a vast range of differentiated products and solutions across high-growth market segments such as packaging, infrastructure, and consumer care. This company makes a good amount of money. Let's look more at these fundamentals. 5.22% dividend yield. The payout ratio, pretty high, 128%. Usually, that number being a little, it's a sector-to-sector thing. So the proper answer is to go look for, the materials sector and go compare all the dividend, superstars in that sector and see what their payout ratios are. A lot of pretty nice banks, a lot of pretty nice real estate stocks, even a lot of some oil stocks, MLPs, can get this 5% yield with a much lower payout ratio. So let's look. We got a 64% institutional shareholders, really above 70 is what's important. The negative 1.88 interest coverage ratio is a little concerning. The profit margins and the return on assets and equity are okay. It's really these annual sales numbers that are just kind of mind-boggling. So that would help suggest that this company is not going to have any problem refinancing its debt, is what I would take from that. Let's look at the Elliott wave. Come on now. You can see some of the work I had before I started this video. That's actually not going to change. Yes, look at this. I mean, whenever this stock just kind of looks like it was told it had to go up and make a new high with momentum divergence. I mean, how many times are we going to see this? Wave 3 makes the highest high. Wave 4 retests the RSI at 50 on the weekly. And then Wave 5 ends with Momo. It's almost like the stock market is controlled by computer algorithms And bringing up the random walk theory from the 1920s illiquid bond market is kind of the most ridiculous thing someone can do. It's almost like that. It's exactly like that. You know, there's going to be some debate about subdividing this wave one. 1, 2, 3, 4, 5. I don't think there's a debate. Yeah, some might say it's here. I don't think that's right. I like it when. Why would I say that's not right? I like seeing wave 5 and wave 3 be somewhat equidistant. Would be my answer to that. Wave 5 ends with momentum divergence. So that's 5 waves up. Wave 1, wave A. Wave 2, wave B. Looking good here. 1, 2. And we can see my equal legs target for wave 3 hasn't been met. I'm going to delete that because it's not, well, I guess the equal legs target is 65. This isn't an incomplete sequence because we haven't broken the wave 1 high yet, so I do believe right now that's not really the most relevant line to have. But look at this, 5 waves up, clear subdivision. If I want to be a little more precise to show you guys we've corrected the cycle, I'm going to go prove that we passed the 50 to 61.8% fib, which is for the lower beta stocks where wave 2, wave two, wave B looks to end. We did. I believe that cycle's been corrected. And from this low, yeah, that's the high. Wave 1. We've seen a lot of these dividend stocks in some of the boring side of the Dow. I know this isn't the Dow Jones, but just it's kind of in that materials theme. It's kind of in that industrial theme. We've seen a lot of stocks in this sector way up here, forming these same highs in the first and second quarter of 2022, correcting for a long time. We have a lot of XLI. We have a lot of these kind of Dow industrial, materials specialists, blue chips, way past this high. Perhaps we've seen this correction as a rotation into a name like this. $67. Yeah, 67. We can get the exact number. I'll just make sure I didn't. We'll get a conservative number. 67 looks like the right one. Shallow wave 4. Wave 5 higher. So again, kind of similar to PayPal and PYPY, while this is a completely different stock. The idea that during these wave 4 corrections, it's going to be less of a headache to hold through, and really not even, because the dividends are typically reinvested by the smart money at these lower prices, and they want it to take a long time. They want this period so they can accumulate as much of the float as they can and sell to retail at a higher price. But these wave 4 corrections with the dividend payers, much different game, not dead money. And now the big thing is that Yield Max and all these funds are making a lot of sectors that used to be dead money holding through these wave 4 corrections. Not so much dead money anymore. This might look a little ugly, but I think it's something like this. The invalidation is very clear, 47.26. This is the A, B, C correction. So I'm looking for 5 waves up. 1, 2, 3, 4, 5. Highest high, wave 3, 4, 5. Clear 5-wave sequence. That's wave 1, wave A. Wave 2, wave B. Corrects the whole cycle. Passes the 50 to 61.8% fib. I'm looking for 1, 2, 1, 2. Wave 3 of wave 3 to begin. Wave 3, wave 4, wave 5 in black. Before wave 4 and wave 5 in black. Sorry. 1, 2, wave 3 in red to 67. Before a shallow wave 4 and wave 5 is going to end wave 3 in black. And then a shallow wave 4 and a wave 5 higher. In small black is going to end this big black wave 3. I know it's a little tough to see. We're up here in the corner. This is why everyone hates to be a bull, because we're looking up at these corners and these parts of the chart people can't see. But that's Dow. The invalidation very clear. Boom. 47.26. A tight invalidation, honestly, for a low beta stock. Tight invalidation. Yeah. We'll see. Remy. So this is an over-the-counter stock. It's not traded on the New York Stock Exchange. I want to get that out of the way. And this dividend is kind of a ghost dividend because it's not a standard dividend. It pays once a year. So this is not for the income crowd. 8.99 interest coverage, great. Profit margin, 15%, great. And we're going to miss other metrics because this is an over-the-counter stock. Remy Cointreau SA is an operator of wine and spirits market. The company's portfolio consists of Remy Martin and Louis VIII cognacs. The Cointreau liquor as well as the Metaxa, Mount Grey, Saint Remy, Bruichladdich, Port Charlotte, Octomore, and the Botanist Spirits. Remy Cointreau is headquartered in Cognac, France. I would have thought it was French because I have never... That was the weirdest mix of English in a language I've never seen before, reading that. Oh, man. Estoy español. Ay, ay, ay. Francais. Oh, man. Okay. Well, I don't want to get political, but... Bro, they were saying that Kamala Harris was talking about the economy and she was drunk. And all the conservatives were trying to be like, how could you vote for this woman? Like, she's wasted talking about, I don't know if she was drunk. That's what they were saying. They're like, is she drunk? And she was talking about the economy. And I didn't even watch the video. I don't know what she said. But everyone was just like, bro, she's drunk and talking about the economy. She drank vodka and she's talking about the economy. And I was just thinking to myself, man, these conservatives need to be careful. Because they're saying a lot of stuff about Kamala Harris that are low-key going to make people like her. She likes to get drunk and talk about the economy? That sounds like a big hit on Finchwood. That's 5 waves up. 1, 2, 3, 4, 5. For Remy, wave 1. ABC, wave 2. Look at this. Perfect 100% extension. The length of wave 1, place of the wave 2 low. Glorious. That 127.2% extension is probably going to be the best stop. So let's see. We got 19.67. 19.67. And this high is, this low is 14.73. This low from the all-time low, I'll make sure this high is right, 24.72. Yeah, so this stop is going to be 6.8383. The widest invalidation is going to be 5.69. So there is Remy. Remy, 1, 2, 3, 4, 5, wave 1. ABC, wave 2. We don't have that perfect highest high on the RSI sequence yet. I can't go. But look at this. This one, though. This wave 1, though, very clean. 1, 2, 3, 4, 5 with the divergence. On the all-time chart, we don't have that 1, 2, wave 3 making the highest high, shallow wave 4, and a wave 5 higher. It's not always perfect. We as Elliott wave theorists, or me as the Elliott wave theorist, can't go tell Mr. Market to, go do exactly what our, counts and RSI should look like. But I think the fact that it's tempting to do somewhat shows how much this has caught on, that this isn't as mystical as people have thought. I think that I'm one of the big contributors, not just to debunking the mysticism of Elliott Wave, but debunking the mysticism of technical analysis and, also quantitative analysis, that it's not smoke and mirrors. It can be boiled down to a science, and we'll see if Remy Bulls are going to be being able to afford some Remy Contro. I'm going to go right to Palantir. I want to give a little more time for Palantir, and I want to give China a little more focus. I talked about China recently with Huya. I own Huya, so there's enough of update. I've been averaging into Huya. I think my cost basis is around 8, actually, and I'm still holding. I might actually add a little more. So that might give you an idea of my Huya analysis. But this Palantir, very interesting, going as planned. The last time I talked about Palantir was the only numbers on it were these. So I said 1, 2, 3, highest high in the RSI, shallow wave 4, wave 5 ends with momentum divergence, A, B, C correction, and from this low, wave 1 and wave 2. We didn't break the invalidations. I want to show I measured the length of wave A, placed at the wave B high, being where wave C ends, and boom, baby, that was perfectamundo right there. And we did not break 20.50. So we didn't break 20.50. I had this red 2 labeled. So we didn't break 20.50 because that was the red wave 2. And then this big wave 2 was, this invalidation came from the 127.2% extension. Neither of the invalidations got hit because I posted this after this red wave 2 had been struck. So from this low, I'm going to try to subdivide this for you guys. What I had was that the length of wave 1 placed at the wave 2 low takes Palantir up to 34 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, that takes Palantir to 40. Now I still got Palantir going to 40, but that was within the cycle of wave 1, wave 2, these big red numbers. What I'm going to show you guys now is I actually think the Palantir is going to get to 39, but within a smaller cycle. So that won't be like the top, if that makes sense. I'm going to refine this count a little more for you guys. From this low, 1, 2, 3, 4, 5 waves is struck. And so I think that this is clearly correcting that cycle. So I'm going to keep the degrees the same. And then we go explode past this high with a big gap. After passing the 78.6% retracement of a wave 1 that sounds like a wave 3 to me. So I'm going to go wave 1, wave 2, me and my perfectionism. Wave 1, wave 2. And so this is a black wave 1, black wave 2. I'm looking for black wave 3. That'd be a good spot. That 127.2% extension. Now, a lot of people don't like when I say a really shallow wave 4 like this, the retest of wave 1 high isn't supposed to be gained. It's not. That's because, I mean, it's really clear to see with this count why that's not a good idea. I'm expecting a very short, very shallow wave 4. Will it start at 33.37? Another extension that I like to use says it could go higher than that. So this wave 3 target zone could be a little higher. I'm going to make a box for it. The wave 3 target zone could be 33.37 to 35.64 before a shallow wave 4 and a wave 5 higher. But instead of this ending this big wave 3, instead of this ending this big wave 3 in red, so what would this black wave 5 target be? After the wave 4 correction, wave 4 retests the wave 1 high but doesn't break it, I'm expecting it's going to be very shallow, very short. So the shorthand to find the wave 5 target is to take the length of wave 1, place it the wave 1 high. That's where 39 comes from. It's very close to 41. But in that other count, 41 was ending a big red wave 3. You understand that? What I have now is that 39 is going to end this small red wave 3. Then a shallow wave 4 in red. Before a wave 5 higher. So this is 39. I'm going to put it up there. 39 for this red wave 3. Shallow wave 4, and then a wave 5 higher. So we're talking about the red wave 5 from this cycle. So let's just try to clear this up. 1, 2, 3, 4, 5. Wave 1 in red, wave 2 in red. We're still just going to focus on this red wave 3. But this red wave 3 is subdivided into 1, 2, 1, 2, wave 3 of wave 3. So before 41 was ending this red wave 3. What happened is that Palantir made another wave 1, another wave 2, and then it formed another wave 1 and an ABC, another wave 2, and it broke this high. So it added another sequence. What that means is that 39 is still the target, basically 41, basically the exact same target. But when there's a shallow wave 4 correction, it's no longer going to be the end of a massive sequence. It's going to be a shallow wave 4 correction, and then a whole new impulsive cycle is going to be higher. It's a long, winding road of saying, I think this red wave 3 is actually going to go higher than 41. It's not going to take a straight path to get there. There's going to be maybe some dead money wave 4 corrections, but we've added another degree. I think after 39, there might be a correction. Everyone's going to call the top. My kind of analysis right now is that that's actually going to be a shallow wave 4. A whole new sequence for this red wave 5 is going to end, and that's going to end this big red wave 3. And then we're going to have a big red wave 4 and a big red wave 5.